how's it going on YouTube? Hope everyone has had a nice day and a nice Christmas holidays. Just going to do a quick market review about what I see in the Bitcoin chart today and how I go from a top-down analysis into the lower time frames to take trades, as well as trying to get a macro bias for what I want to play for the coming months. So firstly, as you can see here, we have a nice fair value gap situated around £14,000 on the on the yearly time frame. So it's going to be of clear interest to us. So I'm just going to flick through to the 3-monthly chart now, or the quarterly, and I can see we've got two fair value gaps on the quarterly chart. One situated around $28,000 to $32,000 and one around $14,000 to $12,000. So my focus now is on the $12,000 fair value gap, and I'm looking for that to get filled because clearly, as you can see now, the previous quarter we were fighting above this 2017 all-time high, but we've broke below now. We flipped that from support into resistance. So clearly the trend is down. I want to be looking now to play some trades macroly into the below fair value gap around $14,000 to $12,000. So now we need to find out how to actually trade this down. How can we trade this into the fair value gap? We've broke below the 2017 all-time high, so it's of no use to us. So I'm just going to mark out a new range here with these two quarterly candles. And if I zoom out now, I have two different ranges, the upper range and the lower range. Obviously we've broken into the latter now, so I'm just going to find out the midpoint of this range and now trade this range here. It's pretty simple, it's that easy guys. Just get your Fibonacci out now, go to the 0.5, get a nice line down there. As you can clearly see, that point there, we bounced off the midpoint of the lower range after the FTX drama, where we had that massive shit show, but we've bounced off here. There's always a reason for where we bounce, where we reject. There's always TA behind that. That's why we have TA. Just going to change these into black now, so the range is separate from the 2017 all-time high. Then of course, as you should go through, you should always label what your support and resistances mean, where you've got them from, because obviously it's easy to follow then. So now the fun begins. If we just hop on from here into the weekly time frame, you can clearly see now we have the two ranges. We have the mid range in the lower range, which are all in the black, and then we have the upper range, which we'll look to play. So with Bitcoin was to break above, we play the upper range, target at the top, we'd use our Fibonacci's to get the mid range from there, and we play level to level from there inside of this range. And it's that simple. Obviously we won't do that now because we've broke below, but we'll play it the exact same as if how we're playing it now. So if we just scroll here now to the recent PA, obviously you can see there's a lot more candles now because we're on the weekly time frame. So you can see how price has been reacting to these levels compared to the quarterly chart. And as you can see here, we've bounced from the mid-range and we came back up. Price was suppressed. We had that one breakthrough, which was a news-based event. Then we've come back down. So straight away, on the naked eye, you're looking for a short back to the mid-range, and you'd play that would be the safe bet of a trade now. So I would remove all of these candles for you, just so you can see how Pre-8 has actually respected these levels. Let's hop onto the daily time frame to get that more in-depth PA, which we've just done now. And as you can see here, we've bounced from the mid-range, being suppressed, spiked right above, which is a deviation, and now we're currently still below, so you're looking for a tag on that for a confirmation of a unsuccessful retest, and then come back down for short, right back to the mid-range, which will start the process down into our fair value gap. So let me just remove all this for you now, and just talk in a bit more detail now about what we can actually see on this chart here. So if we was to not deviate above, but actually successfully retest the support, we would have targeted the range high and also probably the mid-range within here, and this would have been our new range. So if I just put this down here in the text, this would be the new range. So if we're to break above, it's a deviation until a successful retest. So we need to be proven otherwise. That's the whole game of trading, and this is our current range here. So let's just remove this now because it's irrelevant. We didn't hold, we broke back below, it's a deviation. So why did we deviate? Well, if we look here to the left, we can clearly see this was a clear buy side liquidity. There was a lot of buy orders here. So every time the candles were wicking in, as you can see here, we were bouncing right above, but now we flipped that into resistance, and now it's a lot of sell. There's a lot of sell liquidity there and a lot of sell orders. So every time we wicked up, we just came right back below. So if I just zoom out here now and show you something interesting of how this can be a new range here. So you know this is the 2017 all-time high and our new range high. So if I zoom out, of course, come all the way back over here to where we've got these levels from, and if I get the mid-range here to show how we'd play this as a range, if we broke above, we play this as a range. So let's get the mid-level with our Fibonacci's of this, and we've now got the mid-level of what would be our new range if we broke above. So there's our midpoint here. If I just put the text on here, Obviously, we've got a label as we go along. So just put the mid range here, which is the midpoint. Okay, here. And now this is what's going to really probably blow your minds off to see how well respected ranges are. Of course, you can't just trade off range, but I'm trying to give you a bit more top-down detail now of how you would go from a range on a yearly time frame into the 4-hour hourly time frame and place a trade. Because you can see here now, we jumped into the sell liquidity, we've hit the mid-range of the new range, and we've clearly rejected down now. And that would have been your short signal there, and you would have targeted there, take profit 1. If you would have came underneath, you would have looked for that, take profit 2. If we would have bounced, we wouldn't have. As you can see there in that circle, we clearly did, broke below, had a successful retest, and we're coming below now. So that's of course how to actually find a high time frame trade, how we got the short, but how would we have found how would we have traded our way up to the short? So we jump onto the 4-hour time frame to get a look at more in detail PA again. Now, because we need to see what's actually going on, how to get there. We can see that Bitcoin was actually forming a bear flag. So we were on the way up, we were trending up after a big drop down. So we can look to actually play this with trades. So there was numerous times that Bitcoin actually tagged each end of this and we got a bounce. And we were doing this all the way up through the range. You can see 1 there, 2 there, 3. There's numerous to be fair. There's 4, but 5. There's plenty inside of that that's actually tagging. If you went onto the hourly time frame, you'd see a lot more. So we could have traded this now the whole way up by simply going onto the 4-hour time frame and looking at more accurate PA and seeing what's actually going on here. There would have been your short entry, because on the higher time frame and the higher time frame rules all, we would have known they are 2 significant levels and seeing what was actually going on with them there. They would have been your targets, and that's how you would have played it. Now you know quickly how to do a top-down approach from a chart, starting all the way from the yearly time frame, right the way down to the 4-hour. You can even go from the 4-hour into the hourly and try and find quick scalps. But that is how I try and trade my trades into other trades. For example, long my way up, or you can even take shorts on the way up. Longer and short and longer and short and all the way up into your macro swing play, and that is how you do different types of trades. So I'm just going to finish off this video here with how I am going to play the next couple of 6+ months, maybe even 2 years, and the macro view and perspective I have on the charts of Bitcoin. So you can see here where I've got my levels now, and this is the range I'm looking to play. I'm looking to fill in this fair value gap below, which is underneath where we've bounced from the mid-range. The reason we dropped down onto the mid-range was the FTX drama, but I personally do think we're going to drop below. So once we drop below into the lower section of this range now, that's when I'm going to start be prepared. Well, I'm going to prepare now, and that's when I'm going to start dollar cost averaging into some spots. So if we just zoom out here, you can see how that would play. I'd expect a deviation below, and that is because if we go into the quarterly time frame here, you can see we have a fair value gap here to be filled, which is also the wick of the last quarterly candle. I'm just going to mark this in red to make it clear for you, which comes in around $12,500. This is where I will be putting in the majority and going in hard with my bids for spot orders. You'll find that altcoins seem to follow Bitcoin with this position. Once Bitcoin goes there, altcoins will be in a similar crucial spot. You could say that Bitcoin could come here to fill the inefficiencies, but I personally think once Bitcoin hits that red line, we should bounce back up. It will cause a deviation below the range, hit a key level, bounce up, and that will fill the inefficiencies for me. I don't actually see Bitcoin going any lower. If I just zoom out on the 1-day time frame now, this just shows the actual macro perspective with a bit more PA for you, and that is where I'll be looking to buy into my spot positions. So I'll be keeping you all up to date with that. If you actually really enjoyed this video, please do like and subscribe. I'm going to be focusing on actually pushing out a lot of educational content for the following year throughout the bear market, helping those that need it and are inexperienced. So it'd be nice if you could all show the support back to me, like and subscribe, and even comment if there is anything you would like me to go through in the next video. Have a great week, have a great day, have a great year. Let's all kill it, and I look forward to seeing you soon. Thank you. Goodbye.